Welcome to the Trading Bell Show. My name is Maina Shege. And, you know, as it goes, whether we have elections or not, certain forces of the economy and the markets have still been performing. And we're going to analyze that. How has the market been from Jan to date? And of course, definitely speaking about matters economy, we're talking matters inflation as well. And we're going to analyze all that. And to help us understand this, I'm joined by two amazing gentlemen. That is Churchill Ogutu, economist at IC Asset Managers, and Solomon Kariuki, research analyst at AIB Access. Welcome, gentlemen.
Thank you.
First of all, let me ask you, Churchill, I'll start with you. Did you vote? And where were you voting from?
Yes, I did vote.
Yeah.
Donham Primary School.
Yeah.
That's Embakasi East constituency.
Oh, great. Yeah. Solomon, did you?
Yes, I did vote.
Yeah.
I did at my rural station.
Yeah.
In Gatundu North.
Gatundu North.
Yes.
Well, there's sort of a little bit of uncertainties, as we can see, because now there's a petition going on and all that. But let's just have a quick look from your own perspectives. How have the markets been? And maybe Solomon, I'll start with you. How have the markets behaved? Maybe you could tell us Jan to date and even through this season of elections.
Okay.
Yeah.
Starting at the year, it was deemed to be an year of bad events, because when at the start of the year you saw that there was the Russia-Ukraine war, and then as we proceeded there was jitters in terms of what's going to come in terms of elections. But what we have observed from the NSE market is that we have seen resilience in terms of the performance, even though both indices that track the market have been on the negative. We would say it has recovered from where we started sometimes later in the year, whereby the market was really not performing well.
Yeah.
So if you look at a year-to-date basis, the NSE 20 has performed well at around a loss of around 7.8%.
Okay.
While the all-share index has lost around 14.5%.
Okay.
So sometimes in the year, both had lost close to 20%, and this has been observed from the month of the end of May, start of June, whereby the vibrancy in the market came back, and that is what has been able to claw back some of the losses that are there.
Okay.
So we expect that this would continue, and we are positive we might close the year at a positive performance for the indices.
Wow, that's good. That's good. I mean, Churchill, let me bring you in. You have been into this markets now. You're looking through the economic eye. So what has been your observation so far?
Thanks, Maina. I think by and large, the backdrop that we had over the course of this year, Solomon has alluded to some of those factors. We had Russia-Ukraine war. There's also been some currency wobbles. Remember that this market is a split between foreigners and also retail local investors. Yeah. And also some of the fiscal concerns that we have witnessed in the course of this year. So ideally, that should have led to some negative performance even on the bond space. But largely, on a year-to-date basis, we haven't seen that wide negative performance in terms of the bonds market. So it's just speaking to about resiliency, but that also speaks to the demand and supply factors that have played out over the course of this year in that particular market, bonds market here. But by and large, even against the backdrop of the elections, we haven't seen wide negative performance in the bonds market that we had expected to see. So that's quite a plus for this particular market.
Okay, so Churchill, speaking of which, you have observed successive elections, and my quick question to you would be, is this election any different? Has it been more favorable to the markets from your observations?
Thanks, Maina.
Yeah.
Let me compare this election with the previous election that we had. And so far, I think the difference is that this time round, yet we haven't seen an nullification of the presidential result. But let me not preempt that outcome, because that's the process, the Supreme Court process is still ongoing, so let me not preempt it. But that was the difference that we saw last time around, and even the markets, the NSE equities market had to be halted because of that breach of 5% intraday trading in the whole market here. But that said, and doing a comparison with other electioneering years, I think this time around we had some other nuancing factors at hand. We had the Russia-Ukraine war that played out, and had an impact even with foreigners' interest in the frontier markets and emerging markets such as Kenya. So, and also we had what we call the Fed rate tightening, with the Federal Reserve has been increasing its interest rate. And the impact of that is now the foreign investors, mostly from the developed world, US, European markets, they now start to look at those markets quite attractive, and that means that even the frontier markets, emerging markets such as us, doesn't get that kind of interest amongst the foreign, by foreign investors. So that's played out since March all along. Into the during the course of this year, and also the currency wobbles. Some of the challenges that we have seen within the currency markets, whereby some of the people who would like to invest internally, they're not able to get their dollars. So that means that even for an investor, foreign investor in this case, who wants to look at the Kenyan market, but they're not able to get back their dollars at the point of exit. So that poses some challenges even for other investors who potentially might want to look at the opportunities in Kenya. So those are some of the nuances that also were in tandem, in as much as we had an electioneering event this year that also had an impact over the course of this year.
So Solomon, let me come to you as well. From your observation, especially on the equities side of view, has this election been a bit different when you look at how the movements have been compared to the others? Any observations that you've made?
Well, I think to what Churchill was talking about, unlike other elections, that this election had other external factors that were at play. So you find that if you compare it to 2017 in terms of the net position for the investors, you find that this year the investors have been in a net selling position. That means they have outflows. The outflows are even higher. I think they are 3 times higher than 2017. But we can't really point out to the fact of elections. So we see it as other factors. So the markets in the developed markets are becoming more attractive with the hiking of the benchmark rates. So you find that investors are now would be very comfortable making 2% in the Nasdaq rather than coming and making 20% at the NSE. So that risk factor then is making investors to exit. And also the factor of the dollar. You find that the Kenyan market, the dollar shortage was a regional issue. I think something Churchill can corroborate. So you find that the Kenyan market, in terms of the dollar shortage, it was more, I would say, more accessible than the other regions. So that would make the exit in the Kenyan market more comfortable for investors. And so that factor alone then has been a key contributor to the foreign investors being net sellers in the market.
Great. Churchill, you know, I think you've been mentioned there about, let's talk about the shilling and how it's been performing. I think there's been a regional cry about the dollar and what has been happening. But what's your current observation?
Well, I think the official numbers we have is that the shilling has weakened by around 3%, 4% thereabouts. But that notwithstanding, we have now what we call the executed rate. For instance, right now, the shilling to the dollar is around 119. That's the official rate, but probably the rate that will execute it is quite higher than that. So that exacerbates this issue around the dollar challenges that we've had. And also we've seen even the local players in the market, not necessarily in the market, people who have that nexus with the global supply chains crying out because of the dollar challenges, and that has also impacted foreign investors, the investment decision. But on a comparative basis, we are seeing that if you look at, say, other countries within the continent, we saw Egypt devaluing their currency. So it had to weaken their currency by 15% as a way of enticing foreigners into their market. Ghana, I think, has done another, like something in the order of 20%. Their currency, cedi, has weakened by that order. But because of the fiscal concerns that they've been having, so if you come to Kenya and you look at where we are as a country, probably to most people is that the 3%, 4% weakness that you've seen might not even reflect the fundamentals of where we are as a country.
Yeah.
So probably there's been a clamor that probably we may need to see some further weakening, and even the outlook from some of the people who look at the Kenyan market, it's all pointing towards some further weakening of the shilling, probably to reflect the official rate to be where the executed rate should be.
Okay.
At least that should bring some transparency, even in terms of just give some comfort even to investors,
okay,
that okay, in terms of the investment decisions, they might just know that okay, it might be an input into their risk considerations if they're looking into Kenya.
I think the question for any investor who's watching today would be, is it still a good time? Do I hold? Do I jump in? From your observations, what time is it? What season is it for any investor who is watching?
Okay, I would say for any investor interested in the participation in the NSE equities market, right now is the best time to come in.
Yeah.
I know it might be a cliche term since I'm conflicted as a stockbroker, but I would say it's the best time to come in because from observation you find that most of the counters are trading at 5-year lows. Most of them, especially in the banking sector, we have seen they have touched 5-year lows in June. They're trying to recover, and we have also expected good half-year results, which could be reflected in the full-year results, and that would mean good dividends in the next year.
Okay.
So we see good entry opportunities currently. I think the best one that can be spotted by anyone is Safaricom, currently trading at around 29.5, 29.8. So, and it started the year at around 38, 37. So that means it has lost around 21% on a year-to-date basis. Yeah. So if you look at it right now, and from how we view the company, the loss has been largely contributed by foreign exit, something we talked about earlier. You find that the foreigners, once they talk about exiting, Safaricom becomes a very liquid counter. And it's an easy, it's a long-hanging fruit for them in terms of wanting to exit. Okay. So, and that exit opportunity provides now a good entry opportunity for local investors. Yeah. Because at 29, and given actually my recent valuations show that Safaricom should be trading at around at 7.5, at 7.5. Wow. So that means investors are looking at a counter that is highly undervalued. Yeah. And also we are looking at the banking sector. It's one of the counters that I usually follow. Yeah. And you find that the fact of the currency challenges has been a blessing to the banking sector. Oh. Because you find that the widening spreads between how much they can go further or below the 119 mark is what has been contributing to an increased income in terms of forex trading.
Chachi, let me come to you and let's talk about the bonds market as well. I'm sure you have a keen eye on how they're performing. What has been your observation as well?
First and foremost, I think they've been quite stable in terms of the yields. For our viewers, there's usually an inverse relationship between yields and the bond price, more or less like two sides of the same coin. So you can either comment about the yields, but on the inverse is on the bond price. So I've seen that the yields have gone up quite marginally by around 1%. Okay. So that means that the bond prices has gone a bit slightly lower than where we were at the start of the year. Yeah. But on balance, looking at where we are, inflation, it was around 5% at the beginning of the year. So right now we're looking at 8%. We're looking at there are some concerns around the currency risk but that's now talking about foreign investors who have usually a bias towards the infrastructure bonds. So, and also we have the fiscal concern. I remember that in the last financial year, which ended in June, we're supposed to issue a Euro bond, but basically that's a bond issued to the foreign market, not the local market, but that was not issued, so there was a bit of some reallocation in a way towards a focus within the local market. But on balance, you haven't seen that the yields haven't adjusted as widely as you'd expected within this whole backdrop. But that also speaks to the to the supply side, in the sense that we have the fiscal agent, in this case that's the Central Bank of Kenya, which issues treasury bonds on a monthly basis, on a weekly basis, the treasury bills. But now on the form of the treasury bonds, the type of issuance has been reopening of the bonds that had been issued earlier. Initially, we'd expected that because of this environment, if, for instance, CBK will have issued new bonds, it now opens up for investors now to price it depending on what they are saying in the current state. But in the event that and what played out, the reopening of the bonds that had been issued, already the pricing is already there. If, for instance, they are opening a bond that was issued 3 years ago, you can see the pricing in the secondary market that NSE releases on a daily basis, and then you can now be able to more or less like price within that band. So that more or less has now depressed the yields to where they are. So it's more of an issuance issue, the supply issue, rather than the demand issue. And that has also meant that even on some of the bonds that have been issued this year, we've seen that they have been undersubscribed, because to investors, when they see that a bond has been reopened, they already know that there's more or less like a moral suasion, that the yields should be more or less depressed. So they are not want to bid aggressively. So those speaks even to the subscription, the performance that we've seen, which has not been satisfactory as we would have seen had the bonds had been new issues.
The still underlying question for any investor watching out, saying, okay, I love investing in bonds. In fact, I'm considering to keep on, piling up my investment. It's still safe. Still a good time to do that, right?
Absolutely. It's still a good thing because those are guaranteed.
Yes.
You invest and then each and every 6 months you get some income. So that's a guaranteed investment.
And in case you have any questions about how do I invest in bonds, how do I invest in these shares, remember you can always visit the NSE online platforms, and we have videos, immense videos talking about this, and even some of our brokerage firms as well have done quite a number of sessions on that. Let me quickly now touch in, before I come to you, Solomon, let me touch on the inflation. What would you say about the current rate? We are seeing a lot of people saying, hey, what's happening? I mean, in fact, someone was asking as a joke, what is 1,000 shillings? Because today, the things you could purchase, the purchasing power has really gone down. So what are we seeing? Inflation, everybody's asking that question.
Well, let me have a positive spin to that.
Yes.
The inflation that we saw, that was reported for the month of July, that's the latest number that we have for inflation. That was 8.3%. But ideally, that 8.3% is telling you is that the 1,000 shilling that you had in July last year, its purchasing power as at the end of July had been eroded by 8.3%. So if you are able, if you are buying, your 1,000 shillings is buying less by that 8.3%. So when you look at now investing, because now in terms of investing, we're looking at it for the long term. So case in point, look at 364-day T-bill. So that's now from a 1 year from now, which is around 9%, or probably just say it's around 8% for argument's sake. So probably some people might say, why will I invest in 364-day T-bill? Yes, the inflation is higher than that.
I know.
If it's 8%. But then again, remember that you're looking at it. One is looking backwards. Inflation is looking backwards, but now you're investing looking forward. So you are still not to get people discouraged, but at least you are safer investing. You'd rather just look at investing in say, for argument's sake, look at 364-day T-bill, which is around 9%. In 1 year's time, you'll get 9% return. So no matter what the inflation will be 1 year down the line, at least you'll be better off than somebody who has not invested. So not to be despair that, okay, there are no other options, but this is just on the lower spectrum. That's on T-bills, which is giving you like a single-digit return. You haven't even looked at treasury bonds, probably, as Solomon was alluding to the fact that even in equity space, this is the proper time to get into. So inflation, this is something that happened in the past. Unless now you are some of us who now it's our duty to more or less forecast how inflation will be. That's where we come into. But nonetheless, you're better off investing. No matter how inflationary regime it is, you're better off investing than somebody who doesn't invest.
That's a good place to end. Remember, investing is way safer Time for the markets. Welcome to the markets. We're just going to briefly look at the top gainers, top losers, especially on the equities, and Solomon is going to help us do this. This is a week-to-week analysis of what has been happening. And from the top gainers, I see Liberty and the likes. I don't know, what is your comment on the counters we see are the top gainers and top losers, Solomon?
Well, most of the counters that have been top gainers for actually on a year-to-date basis have been the counters that investors often overlook. And I think Liberty is one of them. Because even when you look at the trading was mostly done by local investors.
Wow.
And we suspect that some of the factors that are driving it is expectations of positive half-one results for the group. And you have seen some recovery in the insurance sector from the other peers that have released their results so far. And we also, there was an announcement of share purchase by the South African parent company. So we also suspect that is another factor that could be driving the good performance by Liberty on a week-on-week basis.
Great. Thank you so much for that. We have to end it at that, and I want to just ask you to speak to any investor who is watching. Chachi, let me start with you. What's your key message to them in 30 seconds?
Well, I think the period of uncertainty is now behind us. Now with the political event, more or less, we are coming to the tail end of that. So this is the time now to look at opportunities at the NSE, be it on the stocks, be it on the equities. This the opportune time to start relooking this market.
Great.
Solomon, what's your message to the investors?
Well, for me, I would say for investors, it's the best time to come into the market. And do not fear because you do not have a lot of money. You only need to buy a minimum of 100 shares of any company. And for some counters that are trading at 2 shillings, then that means you only need 200 shillings. So it's never about the amount of money you have. It's your ability and your willingness to participate in the market and grow your wealth.
I can't end this show without answering at least one of the questions. And let me send this to you, Solomon. Joy was asking, how much do I need to invest in shares?
Yes, as I've said, you need only to buy 100 shares, minimum of 100 shares of any company. And I'll take an example of even Safaricom right now at 29.8. So you need 2,980 shillings.
And you're a shareholder.
And you're a shareholder at Safaricom.
Wow.
And with that, you can give yourself some time to accumulate maybe 100 shares every month. And within a short period of time, you qualify for some good dividends. Yes.
All right, there you have it on the Trading Bell Show. Remember, for your questions, we'll still answer them online, so keep them coming. And for that question on shares, by the way, you can still go to the online section of the NSE, the YouTubes and everything else, and get to learn how to invest from the 101s that you may have. I want to end on this note that there's a student challenge. If you're a student in college, university, that you can participate, please visit the NSE online channels appearing at the bottom end of your screen and participate in that if at all you're a student, and there's a chance for you to get to learn how to participate in this market. That's it right here on the Trading Bell Show. Remember, your feedback is welcome to us, still on the social media handles appearing at the bottom end of your screen. My name is Maina Shege. Thank you for your time.